Welcome to Real Estate Coaching Radio, starring award-winning real estate coaches and #1 international best-selling authors, Tim and Julie Harris. This is the #1 daily radio show for realtors looking for a no BS, authentic, real-time coaching experience. What's really working in today's market, how to generate more leads, make more money, and have more time for what you love in your life. And now your hosts, Tim and Julie Harris.
Julie, we finally have some absolutely stellar news that frankly you and I have been predicting when we did our 2024 predictions podcast in January. Actually, I think we did it in December of last year. And we also did another predictions podcast, last week?
Yes.
Predicting what the next 6 months and the last 6 months of 2024 would be like. One of the things we predicted was the interest rates were going to fall. But what we didn't quite predict accurately, so I'm not going to pat ourselves on the back too much, right? Is that why they would fall. So the interest rates have fallen because there's now fear that there's going to be some form of recession based on the employment data. But guess what's going to happen is the Fed is going to absolutely positively drop interest rates. And what I've been reading, Julie, I don't know what you've been reading,
yes,
is they're going to go down by something like 50 basis points.
I've heard between 50 basis points and an entire point.
That's
so
just phenomenal.
It is phenomenal. And it's already starting to happen without it officially happening, right?
So as we were saying in our predictions podcast last week, what's going to happen when rates fall, it's going to be such a bounce back of it's like if you can imagine pulling a rubber band and just keeping it pulled for a long period of time and then finally letting it go, the sense of relief for no longer having to use your muscles to keep that thing fully extended. That's what's going to happen to the economy.
That's right, because lower rates are finally here. Traders were expecting the Fed to be able to cut rates by, as you said, a half a point before this week, but now we're predicting at least a full point of cuts. Last Friday was one of the only a few days in the past 2 decades with as big of a single day drop in average mortgage rates. This significant reduction in mortgage rates is having a profound impact already on the real estate market. And so at the time of me writing this, which was, 24 hours ago or so, from bankrate.com, it's a good place to go and check rates.
Whoa, seriously? There's a 30-year fix for 6% now?
That's right.
That's amazing.
Exactly. And I looked again this morning. The average today, 24 hours after I wrote this, was 5.98. So that's...
Julie, just like 90 days ago, it was
yes,
like 7.5, 7.75.
Exactly.
This is going to be I'm sorry for jumping on your notes, but
okay.
I haven't read
We're
your
good.
notes prior to the show. But this is going to be the All-Employment Act for every loan officer.
Oh, yeah. Think of the refis, too.
Well, that's what I'm saying. I mean,
That's
the
right.
rates have been high, relatively speaking, to what they are now for 2 years. So all the mortgages in the world, you, dear listener, might be included on this, or not in the world, but the United States. If you have a rate higher than 6%, you know what your homework is going to be from today's podcast. Sorry, Julie, go ahead.
That's okay. So again, how can they get the notes? Because there are a lot of numbers in this one.
Well, exactly. So if you want the notes from today's podcast and all of our previous podcasts, make sure you subscribe to our free daily newsletter, which is harrisrealestatedaily.com, harrisrealestatedaily.com. Just go there now and just enter in your email address, and then you'll get our full notes. Because when you are on iTunes or Stitcher, Spotify, all the places are podcasts, and obviously over on YouTube, you're only seeing part of the notes because they clip the notes. They won't allow us to put long form notes in anymore. So if you want the full notes, you've got to subscribe to harrisrealestatedaily.com and then use our notes. Julie writes these with the idea that you're going to reuse these. Maybe you run a team. Maybe you run a brokerage. Maybe you want to do some social media. Use these talking points when you're trying to convey the message that finally the housing market is going to have very much what feels like I don't want to use, too many, big gratuitous words, but it does feel like it's going to be a housing boom.
Absolutely. So again, from bankrate.com, great resource. There's a lot of places that quote this, but I find they're pretty easy to use. 30-year fixed as low as. And when I say as low as, it depends on all of the normal factors, your credit and all of the different things. But as low as 6%, 15-year fixed as low as 5.21. That's right. You heard it. I had a 5 there. And the 5/1 adjustable as low as 6.4. The 3/1 adjustable as low as 6.1.
Now that's interesting. So the 30 years lower than the adjustable rate mortgages.
Yes, which is also great because who wouldn't want to just go ahead and fix it if you could, right?
Well, it tells me that the arms are going to be less.
Yes, that's right. And I looked at this again, I think a lot of people stopped looking at rates because it seemed like they weren't coming down forever.
Well, Julie, just pause here. There's 45% of all Americans have no mortgages. They're paid off. Their houses have no loans on them. And there's, if I remember correctly, $33 trillion worth of home equity in the United States. You're going to see a refinancing boom. You're going to see people that are tapping their home equity and doing all the normal things people do with home equity like we've never seen before, because there's such, again, the rubber band is finally snapping back. There's such a pent-up demand. It's not just going to positively affect housing, go housing, right? But it's also going to affect all the other things that those people are going to start spending their refi money on, or their, what was it, Julie? 50% of the country, like I said, 45% have no mortgage, but the other percent of the country with mortgages, 55%.
Yes.
They have on average, half of those people on average, at least 50% equity.
And going up even as we speak,
right.
Literally. Yes, that's right. So you were just giving me a good precursor to our 4 points. We're going to talk about the effects of this reduction. And again, we're just on the edge of it. It's probably coming down even more, followed by 7 quick action steps to take advantage of this good news. So first are your talking points. Number 1, this is what we've been waiting for: boost in housing market activity. Lower mortgage rates will stimulate overall market activity, including higher sales volumes. Remember, this was on track to be the lowest sales volume since they started recording it. But now, this year, but now we're getting it back on track. Increased construction of new homes as well to meet the rising demand. All good for real estate agents and brokers. Now, according to my favorite, housingwire.com.
Well, and sellers.
And sellers, yes, of course.
And buyers.
Yeah, it's all good. It's all good. Ahead of the Fed's meeting next month, mortgage rates have already started to come down, hitting their lowest level of 2024 on Thursday at about 6.62%. And again, since Thursday, they've continued to inch down. Head of Bright MLS, Lisa Sturdivant, stated, assuming the economy comes in for the so-called soft landing, lower mortgage rates will bring both more home buyers and sellers into the market, more listings, guys, in the second half of 2024. Now, Lawrence Yun, chief economist of the NAR, National Association of Realtors, states the drop in mortgage rates is driving more buyers into the market, which is good news for the real estate industry. And HousingWire adds, builders are ramping up construction to meet the increased demand fueled by lower rates. Remember, builders are affected by low rates as well, and they had a little bit of a pause until this good news.
Well, I mean, this is what I'm about to say, not necessarily good for you and I personally and every other landlord out there, because rents have been going up to the point where now a lot of people, because of the lower mortgage rates, are going to jump out of being renters and they're going to be able to purchase homes again. It always, it's an ebb and flow like that. I don't see this as a point, but I'm going to point this out as well. Many of the major markets in the country have more inventory, more resale homes for sale than they've had for sale in years. You follow this for HousingWire and
That's
the other
true. It's
things.
up almost 30%.
Right. So you're going to see, again, this is just a weird little, I think, then you have, of course, the commission sharing lawsuits, which we're going to talk a little bit about in a second. But you have all these events that are happening at the same time. Rates going down. And remember, these are rates before the Fed has officially lowered the rate, and Julie said they might actually go down by a full %. So rates are going down. Inventory is on the rise. If you are not taking massive action and calling all your prospects, which is the second part of Julie's presentation today, so I won't jump onto it.
It's okay. We've got some action points for what they're supposed to do about all this.
Yes, ma'am.
But again, back to our talking points. Number 2, increased buyer affordability. How's that? Well, lower mortgage rates reduce monthly mortgage payments, making homeownership more affordable for buyers. This can lead to an increase in demand as more people are able to qualify for loans and enter the market. As Greg McBride, chief financial analyst at Bankrate, says, lower rates are opening the door for many first-time home buyers who previously couldn't afford to enter the market. I would couple that with more inventory so that they're more likely to actually find something and perhaps not have 20 offers to compete with.
We do need to interject what might be potential headwinds, and I think it's going to be all the consternation, surrounding the whole, buyer agency litigation. So
that's true, but we've got 3 more podcasts this week about that.
Yeah, well, I mean, it's worth talking about because really, if you think about it, Julie, over the next, not even just 6 months, but 12 months, there's just so many reasons to believe that, as you and I have been predicting, there is definitely going to be a new housing boom. And it's not going to be like a complete hockey stick. It's going to be a slow building of inventory, slow building of buyer demand. Frankly, you're going to see more inflation or more appreciation in homes. It's all good. So you've been waiting. All of us have been waiting now. Seriously. We have actually, this could very well be the end of what's been a 2 or 3 year. Some people call it a housing recession. I don't know, a recession, generally speaking, last 2 quarters. This is more like a housing depression. We were tracking to have the worst year ever in 30 years?
In terms of sales.
In terms of other overall home sales, right. the number was going to be, as it was tracking, less than 4 million total home sales. To put that in perspective, Jules, was it 2021? It was over, it's like 6.3 million.
6.5 million
Yeah.
at the peak of the pandemic years.
Right.
Yeah.
So, I mean, we're not returning to normal. We're going to be returning to something that's going to definitely feel like a boom again. You've got to get your head wrapped around the realities of what we're giving you. And if you're feeling it in any way like the ball has gotten by you, it's not. You're in the right place at the right time. Now take actions. But I will say the one thing that's definitely going to provide a headwind to the market is all of the confusion that happens this month as pertains to the commission sharing lawsuits and buyer agency. Julie and I have spent an inordinate amount of time, and actually it's been kind of fun.
Yes, mostly.
Creating a new product for you, and we're going to be releasing that just in time to save your bacon in many cases. It's going to be a comprehensive system that's going to make it so that your buyers are going to be anxious, excited, and frankly motivated to want to work with you and sign exclusive buyer agency contracts that do require that they obligate themselves to pay your commission. I know this sounds a little bit strange, but the reality of it is in the new world, you're going to have to show your value. Everyone's talking about how do you show your value to a potential buyer. I've never had to do that before. We've done all the heavy lifting for you. We've got a great presentation that you're going to get. This is all part of our new ethical real estate professional designation for buyer agents. So we're going to give you a great presentation. We're going to give you great collateral, all the contracts, everything, all the scripts, the objection handlers, all of it in one place. And it's called Ethical Real Estate Professional. And we're going to be releasing that at the end of this month into September. So here's how you get on the list, because here's what we're going to do. I've had some of you asking me for favors just to make sure you're the first 100. So last week of this month, first week in September, we're going to be sending a text to all the people that have got their names on the wait list. And then the first 100 that decide to get the designation, then we're going to close the doors to the program and open it up every 30 days. We're never going to allow more than 100 people in the program every 30 days. Why? Because frankly, this is going to be a coaching program, and we predict not only is there going to be a huge demand for this, but there's going to be a lot of confusion. People who have been doing real estate for a long time, like Julie and I, over 30 years, it is really confusing to understand how to essentially explain to buyers how the new buyer agency stuff works. And I mean, have you thought about how you're going to explain to a buyer why you're worth 2.5% or 3% or 5%? These are all things that you're going to have to learn and master, just as listing agents have been doing forever. And I'm going to interject something here. And we talked about this on the podcast the other day when we did with Holly Mayberry, the broker at eXp Realty. Julie and I actually have reasons to believe, and we're going to be talking about this week, the buyer agent commissions actually might start to increase, not decrease. I know everyone and their brothers expecting the opposite, but Julie and I are going to give the case why we think buyer agent commissions will actually increase for, frankly, the buyer agents that are worth paying above market commissions to in the eyes of the buyers. So yes, be excited. You are in the right place at the right time. Here's how you get on the list. Text the word buyer to 47372. Text the word buyer, B-U-Y-E-R, to 47372. That's all you've got to do. And when you do, you're going to be on the list. And then I'm going to send out the text, or our team will send out the text that we know when the product is ready. And we're going to give you an exclusive link to sign up and become a member of the Ethical Real Estate Professional designation. And once you do, you will no longer have to worry about anything as pertains to the whole commission sharing lawsuits and how you're going to stay not just competitive, but how you're going to win. So text the word buyer, B-U-Y-E-R, to 47372. This is absolutely required for all of you that are individual agents, teams, or brokerages. What the heck else are you going to do? You don't have a plan for this. We do. So text the word buyer, B-U-Y-E-R, to 47372. Next point, Julie.
All right, back to your talking points. Lower rates will potentially mean continuing rise in home prices. With more buyers entering the market, competition for homes can increase, potentially driving up home prices. Sellers will receive multiple offers again, often above the asking price, which can accelerate price appreciation. Here's a quote, "We are seeing heightened competition in many markets leading to faster home sales and higher prices," says Mike Frattanoni, chief economist at the Mortgage Bankers Association. Now, I'll couple that with an article I read this morning that was interviewing, I can't remember exactly, it was one of the mortgage news things. It was interviewing people who had decided it was time to move, partially because rates were coming down, but specifically because they had things happening in their lives. They needed more space. They wanted better schools. All of those things are happening.
But that's worth repeating, the point Julie just made. People, it's not always that people are moving to buying and selling real estate to flip and to make money and to all that. People move because of the natural progression of life. Your family expands, your family shrinks. You have to relocate. All the things that happen that affect, if you look, those of you who are active listing agents, look at the last 10 people that you had sell with you, successfully list and sell with you, chances are they all had to sell. All the reasons I said and a whole bunch of others that we teach you in Premier Coaching. But the moral of the story is all those people who have been able to procrastinate making the decision, like a downsizer can put it off for sometimes a long period of time. Maybe somebody with, one too many kids in a 2-bedroom house, or 3 too many kids, as is the case when I was growing up,
right.
that, you can use the basement, you can build, bunk beds, all these things.
Sleep in the garage.
Exactly, sleep in the garage. Well, now that rates are down, you're going to see those people finally moving. So that's what we're going to start seeing. All the people that have been sitting on the sidelines, waiting for the market conditions to change, waiting for the interest rates to fall, making it so they can afford their payments, those people are jumping in the market.
That's right. And that was a common theme of these interviews that I was reading. What they were saying is because of this point, more competition, rising in home prices, their rationale was, I know that I have to move for insert your life reason. I might as well do it now that rates are coming down, now that inventory is up and I have something to choose from, because if I wait, I know the price is going to be more.
Well, exactly. Yes. So in other words, because we're going to continue to see the appreciation or the inflation in home values, because that is going to happen. Homes have already increased in value by 6.3% year over year nationwide. That is a lot. Some markets a lot more, a lot less than some others. You guys get the point. That trend is going to continue, especially now that rates are down. You make payments lower, you increase demand. Values are going to increase. So if you're going to see a lot of people that are worried about missing the market again. 2-3 years ago, when rates were lower and they didn't buy or they didn't buy up, they didn't move up or just make whatever move they've been procrastinating, all those folks are coming back into the market. You can feel it. I can feel it. Make sure you are not following the normal real estate trend for our industry where you start to lose momentum after the summer, into the fall, into the winter. Because really what we're seeing is there's every reason to believe that the official spring market, with air quotes, of 2024 starts in August, September this year. Yeah, a little bit put off.
I really think that's happening. I not just because of all these headlines in our reporting, but also because, between the coaches and our calls, we hear this every day. It's already happening. Most of our coaching clients have more in contract than they've had in a long time.
We watch markets where we have rental properties, which is basically in 7 different markets. And we watch those markets like a hawk. And there is definitely a sell-off.
Definitely. And I would say anytime we personally lose a tenant, it's almost, I would say in the past 3 years, 100% of the time it's because they were buying a house.
Oh, yeah.
So there's that. Okay. Now, final talking point, and then we're going to get into action steps. Point number 4, refinancing surge. This is good for all of our listeners who are in mortgages, right? Homeowners with existing mortgages may take advantage of lower rates to refi their loans. This can lead to a surge in refi activity, allowing homeowners to reduce their monthly payments or take out equity for other purposes. That's good for the economy. Refinancing applications have spiked as homeowners look to capitalize on the lower rates, reports Joel Kahn, Associate Vice President of Economic and Industry Forecasting in the Mortgage Bankers Association.
And remember, when you refinance or you do a home equity line of credit, you don't pay taxes on that. So that's a way of keeping the asset and pulling equity out. And now that the interest rates are going to fall, maybe somebody's refinancing out of a 7.5% loan that they took out 2 years ago, but the house is appreciated by X, maybe hundreds of thousands of dollars depending on the market. They can pull that equity back out. And with the lower rate, essentially the payment's going to stay the same, if not be a little bit lower, because the lower interest rate, even pulling the some of that money out of the deal. You guys might want to think about doing this yourselves too.
I've had a lot of coaching clients do that, where they kept, a lot of them bought something during the pandemic years. So they've had it maybe 2 or 3 years now. They refied that, pulled some equity out, kept that house. Some of them turned it into VRBO, some of them regular rental, and then bought another house, right? So you can do that with lower rates.
Well, it's one of the fastest ways. In America, the most common way that people become millionaires is real estate. And that's like most people who become millionaires in America do it through real estate. Like first generation wealth is built through real estate. And then after that, it's from investing and doing other things. In other words, they build their fortunes, they built their base with real estate. And then with that money and that cash flow, then they started investing it in things like private equity. Do that same thing.
Exactly. Okay, so speaking of which, what should you do about all of this good news? How can you spin the great news that we just shared with you into more business this month, this quarter, and the rest of this year? I've got 7 quick action steps for you. Number 1, Start watching the rates again. Watch them closely this week and throughout this month. Talk to your favorite mortgage lenders and see what special programs they're offering, such as free rate locks, free refi options, and super low 3, 5, 7, 10-year adjustables. 30-year fixed has come down as well. And number two, so that's number one, is just make sure you're knowledgeable about all of this. Number two, call. That's right. Pick up phone, talk into it. 100% of your buyer prospects to notify them of the positive shift to mortgage interest rates. Simply ask, what does this do to your plans? Get those buyers to a lender to be pre-approved or lock them in if they're already in the process. Now, for example, on a $700,000 purchase, 20% down, the difference goes like this, and you can write this out. At 7%, the payment is almost $5,000 a month. This is PITI, right? So $4,884. That's a $700,000 purchase price, 20% down at 7%, our previous rates we were getting used to. At 6.5%, it goes to $4,697. At 6%, it goes to $4,500. 5.5%, because remember, rates are going to continue to come down, the payment gets to $4,337. And should we come down that predicted point all the way down, maybe even to 5, that payment goes to $4,164. In other words, on a $700,000 purchase price with 20% down, there's a $720 difference between 7% and 5%. And I gave you the steps in between, which equates to almost $9,000 of savings per year. How many of not just your buyer leads, but even your past clients and your centers of influence know that math and know that that's happening? They need to be hearing from you.
It's worth mentioning here, Julie, too. Builders are going to be buying down the rates based on these new rates.
Even lower, yeah.
Julie, remember what we said. This is the third time we said it on the show because it's really important. The Fed still has not lowered rates. This is just essentially the market reacting as bond rates are reacting essentially to the unemployment. People are, essentially the markets are predicting some form of a recession. So here nor there, just focus on helping people buy and sell real estate. And by the way, recessions are not a good predictor of what direction housing markets go because people still need a home to live in. Most of your home buyers that are renters, maybe, in some cases they might have to put off buying it if they're not, essentially making enough money if they've lost their jobs. But remember what I said, 45% of all the people in America have paid off homes. The rest of the, 55%, half of those people have essentially 50% equity in their homes. And you're looking at trillions and trillions and trillions of dollars worth of equity. So there is so much money. People are so flush with real estate money right now. You are in the right place at the right time. I really hope you're internalizing that because it's so critically important. If you feel like the market's been kicking you in the head, guess what? This is the time to kick back.
Exactly. And coupled with that, this is the highest credit scores have ever been historically as well. So
that's incredible.
I know. It is awesome. Okay. So remember, our previous point was call 100% of your buyer prospects with all this good news. That leads to number 3. Oh my gosh, I've got to talk to buyer prospects. And I got this whole buyer presentation looming over me. I've got to get that signature. Set your buyer presentation appointment and get the exclusive buyer agreement signed. You cannot avoid that. We're here to help you with that.
Yeah, well, I won't droll on like I did a second ago about this, but Julie and I are obviously really excited about the ethical real estate professional designation. But the bottom line is that you have to have an exclusive buyer agency contract signed that specifically states essentially how you're going to be paid. It's going to be a financial conversation you're going to be forced to have with the buyer starting this month. There's no putting it off. If you don't know what I'm talking about, and maybe you're a broker or maybe you're a team and you've been sort of procrastinating, waiting for someone to tell you the solution, it has arrived, but you have to text the word buyer, B-U-Y-E-R, to 47372. Text the word buyer, B-U-Y-E-R, to 47372. And when the new product is released, which will be hopefully this month, if not the first week of September, you'll be the first to know about it. Text the word buyer to 47372.
Which leads us to my favorite point, number 4, go sell a house, or 10. Remember that many of your buyer prospects also have homes to list. I'm thinking about somebody like Patrick Murphy in Columbus, Ohio, who has a collection always of between 15 and 20 buyer, sometimes seller leads. He's going to be excited to get all of that signed. And here's the thing. Some of you guys are going to find that, like take Patrick, for example. There might be 3 or 4 people not ready to sign his buyer agreement. That's okay. And maybe it's not, it's just not now, right? Well, isn't it great to find out because you're asking them to be serious?
We're going to talk more about the buyer agency stuff tomorrow, but it is worth noting, Julie, before, if you were to ask for an exclusive contract signed with a buyer, and all your competitors were just essentially just showing them houses without any sort of agreement in place ahead of time. Well, it's very difficult, or at least took a lot of skill to convince that buyer to obligate themselves to you when every other agent out there wasn't asking for the same commitment. Okay, I get it. Now, keep this in mind. Every single agent out there is going to be required to have exclusive buyer agency contracts signed now. So you're now going to have to think in terms of, how do I get them to want to work with me? How do I show my value? How do I, overcome their objections and help them understand that I'm here to counsel them and help them so they can actually take the advantage of these lower interest rates in this. I think hopefully this is a continuation of the falling interest rates, right? And the heating up the housing market, as you and I are predicting. That's really where it's going to come into. Listing agents for generations, forever, have had to show their value to that prospective seller. They had to essentially have a sales presentation. They had to know how to overcome objections, help the seller get through all the psychology of the financial stuff and all the emotional stuff that was associated with purchasing a house. You're in that same situation now on the buyer side too. But again, we've created this presentation, this whole system. We've mirrored our seller product, by the way, for those of you guys who are in Premier Coaching. It's very similar in terms of an easy to understand, organized process. But just text the word buyer to 47372 and get on the list. Doesn't cost you anything. Do that urgently.
All right, so back to our action steps. Number 5, using our whiteboard tracking system, Premier Coaching clients, you especially know what we're talking about. Rate your buyer prospects from most motivated and qualified to least, and set appointments accordingly. That required that you be speaking with them.
That would be a great podcast, by the way.
Yes, I have it in my lineup.
Okay.
Yes, you're right. Okay, number 6, revise. Here's my favorite coach's point. Revise your quarterly and yearly goals up now that rates have dropped and are going even lower. Let's get to work. And number 7, of course, sign up for Premier Coaching so you can get the support you need. And as we mentioned, and we're going to continue to mention because it's so important, get that buyer presentation. Text the word buyer, B-U-Y-E-R, to 47372. I want to circle back to something that you said, which was, for decades, the biggest objection was, well, why would I sign with you if Bob doesn't make me have to sign? He's going to show me a house this afternoon. That was a tough objection to overcome, and that's why, if we're being honest, most agents didn't get the buyer agency signed. Now, many of our Premier Coaching members, and certainly all of my elite coaching clients, are used to getting it signed.
Well, let's take a step back,
Sure.
okay? When you and I had our real estate team in the 90s and into the early 2000s, we had 7 buyer's agents. One time we had like 10 buyer's agents that were working with us. And we trained them to use a version of the buyer agent presentation that we're going to be giving these guys. So the buyer agent presentation was designed to explain to the buyer how the process worked, what just all the nuances.
What they can expect, what the process is, all of those types of things.
Right. So that is what this, and we would insist that our buyer agents, and this was, some time ago, point being that it worked then, it'll certainly work now, had a normal agency form signed, as required by the state of Ohio, an exclusive buyer agency contract signed, which we're going to be giving you as part of this product, a buyer net sheet signed, and then several guarantees that we were showing the buyer agents how to use to instill value of what the services they were going to provide in the eyes of the buyer. Communications guarantee, all these types of things that we're going to be educating you guys on. That is what we required back from our buyer agents, years and years ago. And many of all of our coaching clients, because our coaching business started as a result of all of our success selling real estate, people heard about us. And so all of our coaching clients, we've always trained, especially the elite coaching clients, when they're adding staff members and when they're adding buyer agents, to follow the exact same process we did. And the point that Julia was just making is the experienced agents out there, especially ones that have been coached by us forever, to always use exclusive buyer agency contracts. They don't even care about the change with regards to commission sharing lawsuits.
They're tired of hearing about it.
It's business as usual.
Yes.
But Julie, they have an enormous unfair advantage in their marketplaces because all the psychology and sales skills and training and all the rest of it, they've already mastered.
100%.
And now you can get in that same position, but you're going to have to take action on this, because for sure there is going to be a lot of fear and loathing that's going to happen towards the end of this month. Probably, honestly, it's going to take the industry maybe up to a year to really sort itself out as to the new reality as pertains to the settlement with the commission sharing lawsuits. Get ahead of that. Understand that it's no longer optional. That's the reason we made this product, and frankly, we're so excited talking about it and sharing it with you, because we know for sure when you see this, you're going to look at this and you're going to say, this is the it's a solution to all the things that you don't even realize are going to be a hindrance to you progressing working with buyers. We've solved all the problems. You're going to be able to show them this presentation. They're going to be able to see all the reasons why they're going to want to work exclusively with you. And they're going to sign your exclusive buyer agency contract.
I 1,000% agree. Of course I would. But here's the thing. I was thinking about this as we roll this new presentation out for these guys. I believe as a result of having to do a buyer presentation, and not just because legally you have to, but because the definition of a close is the logical ending to a great presentation, I believe that because all functioning agents are going to have to learn to do the buyer side presentation, it'll actually have an unintended consequence, and that is making you stronger at your listing presentation. That's formalizing everything that you do. It's not just because legally you have to, it's because it's the more professional approach to everything you do. And when you become comfortable on the buyer side, because for decades, the buyer side has been the more casual side of the business. When you formalize that, you're going to be that much more confident on the listing side. So that's exciting too.
So you guys can see what our agenda is. We always want to steer you all back to wanting to be listing agents.
All roads
lead back to being, if you want long-term stability in real estate, you've got to list to last. That's always been true and always will be true. But in the meantime, your homework, of course, well, I'll give you 2 homeworks. Number 1, go to see what your rates are, your mortgage rate is. Think about whether or not you want to get in a line up to refinance, because as rates continue to fall, there's a lot of these lenders, because I don't know if you've noticed, but a lot of the lenders have gone out of business. And so finding a good lender that's going to be able to do FHA, Fannie, Freddie, the whole thing, they're probably going to be backlogged by months. So you're going to have to think about getting your application in and getting your own process started to refinance your house. You definitely need to do that. Really incredibly important. Number 2, call your centers of influence. Call your past clients. Call the buyer prospects, as Julie said. Call the seller prospects. Call your neighbors. Shout it from the highest rooftop what's actually happening, because most people are going to be so mired in politics because it's an election year that they're going to lose the opportunity to get their payments down quite a bit. Who's going to not want to hear from you when you're calling them up and telling them about lower interest rates and letting them know how much money they're going to be able to save? Oh, and by the way, Mr. Seller, do you realize also, because you bought this house 3 years ago, that the home is now worth 50% more than what you paid for it? And now here's an opportunity for you to actually lower your interest rate and get your and maybe pull some equity out, not have your monthly payment dramatically increase, if not decrease. These are all things that should be motivating you to do the real work of real estate. Get off your duffs, start having real conversations. The people making the most money in real estate right now are the ones that are actually having voice-to-voice conversations. The passive lead generation types, the social media types, the people that are getting all their leads from digital marketing. That stuff works, but it works in support of the proactive lead generation stuff. The real conversations are what you need to be focusing on, especially now. Hopefully this is exciting you. Hopefully you're motivated. Hopefully you truly do internalize the fact that this is what it feels like to be in the right place at the right time. Thank you for listening to today's podcast. Do us a favor, share this with as many other agents as possible. You want everybody on God's green earth knowing that finally we're going to start seeing the bottom of what's been a long-term downward cycle in real estate in terms of home sales. And you, again, are going to be able to be celebrated by everyone you share this information with. Don't assume that they know. Most people don't pay attention, especially in election year. Have a fantastic day. We'll talk with you on the show tomorrow.
This podcast is a part of the C-Suite Radio Network. For more top business podcasts, visit c-suiteradio.com.